If you're an Indian investor in the stock market, should you be worried about the conflict between Israel and Iran? Should you be repositioning your stocks or changing your mutual funds? I have all of the information you need to make those decisions. Let's first take a look at what's happening between these two countries if you haven't been paying attention to the information. Starting June 13th, Israel launched what it called Operation Rising Lion and struck 100 targets in Iran, including nuclear facilities, caused damage to infrastructure and civilian casualties. On the next day, June 14th, Iran launched missile attacks at Israel, struck Tel Aviv and Jerusalem. While Israel had intercepted most of those threats, there was some damage that both countries had responded. Israel responded again with more airstrikes. This continued on day 3 and on day 4, which is June 16th as of today. Let's take a look at how the Indian market actually responded to this. There was sharp volatility on day 1. The Sensex dropped 1,300 points. The Nifty fell a little over 1%. Oil and gas stocks really tanked on that first day between 1.5% to 3.5%. The volatility index for the Indian market was about 10% for 2 days, which means it was very volatile. But as of today, the Indian market has recovered or rebounded. The Nifty is up about 0.75%. The Sensex is up as well. IT financials are improving. Domestic institutional investors, which is mutual funds, insurance companies, regular investors like you and I, are actually supporting the Indian market, believing that this is actually global jitters, it's an opportunity to buy. Here are the sectors that are likely to be hit if this conflict continues, and neither of these countries are at the discussion table right now. So oil spike will happen because Iran is a producer of oil. Brent crude is up 7 to 12%, which means obviously stress on oil marketing companies. There's stress on rupee, which will hurt exporters. About rupees actually weakened to 86 to a dollar. That will hurt anyone exporting. There is a higher risk of inflation, and that will hurt all consumer products. Shipping disruptions. There is fear that Iran will possibly close the Strait of Hormuz, and that will cause problems to shipping industry. It will also cause problems to export sectors who use shipping, and that will be an issue. So effectively for investors, short-term caution is persisting, but there are a lot of top PMS funds, according to the Economic Times, who are looking at it as a long-term buying opportunity for pharma, infrastructure, and a couple of other sectors. And that's an article you can find on the Economic Times. There seems to be limited long-term impact for India. Now, India doesn't really buy a lot of crude from Iran, so we're insulated that way, but it will generally affect crude prices across the board. So what experts are saying is to stay selective, keep an eye on crude, and remain really diversified. But it does seem like fundamentally the Indian market and Indian stocks and Indian companies are, for the time being, insulated from this conflict. Leave me a question if there's anything specific you want to discuss.